Hi, everyone. I'm James Garbutt.
And I'm Denny Dumas.
And this is the Garbutt Dumas Real Estate Podcast.
Okay, the point of this podcast is to try to alter the way that your mind thinks. I think a lot of consumers right now are seeing things slow, interest rates climb, changes coming, and thinking, oh man, fear, right? Scared. I'm going to wait and see what happens. I'm not going to be that dummy that buys at the peak. Versus, we've seen this so many times before. Even in my short 8-year career, I've seen this little wave happen probably 3 times. So 2016, when foreign buyer tax came in, there was this little dip, and overnight it went down 10%, overnight. And that caught up to peak pricing and surpassed peak pricing within 6 months. 2019 was another one. That was a little bit longer, probably a 12-month slowdown, where prices across the board came down upwards of 20% in some neighborhoods for some products. But that turned around so quickly towards the end of 2020. And then I think here we are again. So I want to encourage consumers that are maybe looking to upsize, maybe looking to buy an investment property, that are concerned, or their dad is telling them to stay away because interest rates are going to 13, 14, 18%. Like we've heard some of our clients say their parents are telling them this, which is absolute bonkers. But I want to encourage you to reset your mind a little bit, to understand that with slowdown, with consumer fear comes a lot of opportunity. And so I think this podcast is just going to be a little bit about where to look for opportunity in 2022. And I think the very first thing to talk about is the upsizer. If you are in a condo, if you're in a townhouse and you're looking to make that jump to a larger space, to a single family home, the opportunity is better now than it's been for the last 2 years, let's say. 2019, there was a lot of opportunity in that space as well. But in the last 2.5 years, the equation works out better today than it has in a while for a few reasons.
I think going back to what you said at the start of this, I think rewiring your thinking is really important. And we've said this many times in the past, many times in our other podcasts. You have to be realistic. Be realistic, be fair, and be true to your budget. I think I'm going to blame Instagram and Pinterest for this one. It's Instagram and Pinterest's fault that everyone thinks they have to buy a 10 out of 10 house. It's ridiculous. The house isn't going to be 10 out of 10. Like, get over it. Like, delete your Pinterest apps. Buy what you can afford in a neighborhood you like. And if you're going into detached, just get a house in the neighborhood you want. That's it. Don't worry about anything else. Time will come. Our parents maybe bought the perfect house with a white picket fence, but those days are gone. Buy what you can afford. And during times like this, when things start to slow a little bit, is oozing with opportunity.
Also, avoid reading media articles about Greater Vancouver real estate. I'm pretty confident I can say I've never read one that is actually realistic of what is actually happening in Greater Vancouver real estate.
Clickbaity.
They'll pick one sale that is like, they'll use one sale that is an all-time peak sale in that neighborhood, and then they'll find another one that's on a busy street that's a teardown that has is infested with rats, and there is people squatting in the basement. And they'll say, look at the sales difference. One sold for $3 million, and now this one sold for 1.5. That's a 100% drop or 50% drop. And that will be the article. And it puts fear into consumers because they're not educated on exactly what the difference of these two properties were. Versus the reality is, look at, like we just kind of mentioned, look at the last 10 years in Greater Vancouver real estate. And when we see a slight downward trend or a plateau, how long does that last? Not that long.
No, I mean, in all different types of business, in all different types of business transactions, no one ever just looks at the last 3 months of activity. They look at 10-year trends, sometimes 20-year trends. It's really important to see both pictures. And I think the most hilarious things that we've heard is that my parents told us to wait. I also heard I'm going to wait for the U.S. election. That's a good one. Yeah, everything was going to crash because of COVID. Remember that?
Yeah. Oh, yeah.
Yeah. It's like so many funny reasons why people decide to wait, and none of them are ever right, ever.
Yeah, it's interesting to see the people that kind of battle through the negative media attention, or, these little crazy windows like COVID in March 2020, the people that battle through and purchase, usually within 6 to 12 months, are then thinking, how do I refinance and buy something else because I've just made $300K?
I don't have any clients that regretted purchasing in the last 2 years, even as markets peaked, even though they were stretched, like they're all thrilled. I don't know anyone in Vancouver that's ever invested in real estate that's been like, this was a terrible idea.
When you look at something a little bit longer term, maybe in a 12 to 24 month span, sure, there's ups and downs all the time as interest rates climb. But if you're planning to hold something for 5 to 10 years, rarely is it something that you're regretting. Okay, so let's talk about a few different opportunities. I mentioned the upsizer thing. Why is that a good option, or why should people be aggressive if they are considering upsizing right now?
Well, I think it's been one of the most stable long-term investments that we've seen in Vancouver. Detached homes, it's just been the most stable real estate purchase in the last few years. Condos have their time in the sun, but they have their ups and downs. Detached homes, for one, you can live in it. That's the great thing about a house. That's such a good investment because you can live in it and you're not paying rent to somebody else. There's potential to keep the home, rent it out. There's developer potential. There's a world of potential when it comes to detached. I just think it's really important to know the neighborhood that you're buying in. We had a lot of clients ask us, okay, should I move to Chilliwack? Should I move to Abbotsford? Should I consider Maple Ridge, or areas that are really outside of the areas that they wanted to truly live in? And most of the time we said no. Like most of the time we were like, well, just, let's really exhaust the areas that you want to live in. Let's maybe think about pivoting from detached to a large townhome. The areas that climb the highest have the furthest to fall when markets go down, unless you're happy with the location and you plan to live there long term.
Specifically in like this market that we're in right now, and where I see it being pretty similar for the next 3 to 6 months, is condos are still really active. Like Monica mentioned on our last podcast, a newest condo that she sold last week. And that was an all-time peak pricing, right?
Yeah.
For a 2-bedroom condo in the new Key, it got a higher number than we were anticipating. And looking at that versus single family in a lot of neighborhoods have come off 10+%. In the Fraser Valley, upwards of 15 to 20%. And if you are considering an upsize, your condo's held its value / potentially at peak pricing, and that gap now is quite a bit smaller. So this potentially unrealistic dream of upsizing in December, January, February, when you were seeing single family homes selling $300,000-$400,000 over the list price, that's not happening anymore, and those numbers have come closer together. So exploring that option of potentially upsizing in a slower market over the next 6 months, I think is a really good opportunity for young families right now.
It sure is, especially because you're not competing against as many people, and because we know, I just won a condo for a client last night in multiples in Coquitlam. Yeah. And so we know that those products are still moving faster. And we do know that because people haven't set expectations with their sellers, we do know that there's detached homes that are sitting a little bit longer and not selling in a week like they were in the past. So definitely opportunity there. What do you think about wind-ups, Denny? I've had a lot of clients ask me about wind-ups lately. What are your thoughts about that?
So a lot of people are listening right now and thinking, what the heck is a wind-up? Strata Windup. So that is when an older condo or townhouse complex that is usually sitting on a pretty big piece of land, because in the 60s and 70s, they were not anticipating Greater Vancouver getting this big. So they sprawled complexes over these massive pieces of land. And Port Moody has a few of them that we can think of that
hilarious.
There's like 100 townhomes, but it's on like 20 acres of land. Like they just were not. There's above ground parking, so there's like parks and everything inside the complex. It's
and like the garbage
ridiculous.
Area is like an acre, and like there's just spread out everywhere. It's hilarious. Yeah.
So Strata Windup is the group of owners that own in that complex voting to explore the option of selling to a developer. So it's a complex question and actually a really long-winded answer that usually this is not a quick process. usually once you start talking about strata windup, usually most of the people that actually live in that strata are going to be moved on before the sale actually
exactly.
happens. Right?
So I guess to be more specific with my question, what do you think about investors or first-time homebuyers that are hoping to really like upsize their investment? What do you think about them predicting a wind up, predicting that they'll get a good lift on it and buying into a building that usually needs work? Like they usually are a little bit behind in building maintenance, et cetera. What are your thoughts about using that as a tool to kind of get you into the property you want in the future?
I think it's risky.
Yeah.
I think if you're a first-time buyer and you are speculating that something is going to be wound up eventually and sell to a developer, you are taking on risk because you're buying in an older building that likely has not done very much maintenance. So if that strata windup does not happen in the next 10 years and they need to do some exterior work, that's going to be a big chunk out of your pocket. Like if they're doing exterior work, that could be $20,000, $30,000, $40,000 that you're paying in assessments to do some maintenance to the building. The other thing is, if you're a first-time buyer, what happens if in a year from now you get a boyfriend or girlfriend? What happens in 3 years from now you have a child together and you get married or whatever? Now you're looking to upsize, and now you're trying to sell an older building that needs maintenance, that has the potential of a strata windup, but no certainty. And buyers don't know if that's going to be a 10, 15, 20-year thing down the road. And it's a really challenging thing to sell. Usually those older products too, I know I had a lot to say about this. Usually those older buildings are really challenging to sell and see the least amount of lift in price points as markets climb.
For sure. And like that's exactly what I was thinking. I have one client specifically that has a bee in his bonnet about getting into a wind up, but I've had a few people ask me about this, and every time I'm like, why would you put yourself in a situation where you know you're going to be spending cash? Like, you know, there's no way, like the windows haven't been done, the plumbing needs to be done, the elevator's never been updated. I mean, there's a lot to do. I think strata windups are a great idea if you bought a few years ago and you're just not going anywhere. You're never getting a boyfriend. You're never having any kids. If you can just really park it, sure. But why not just spend that money getting into a smaller, newer unit? And it's usually the size that's attractive to people. It's like, oh, I can get this 1,000 square foot, 1972 building with no in-suite laundry, or I can get a 523 square foot, junior bachelor. Go for the junior bachelor.
It's a really interesting idea to talk about if you have the financial means to let that investment sit there for as long as it takes for this wind up to happen. If you are putting most of your net worth into your first place and going to live there for 3 years and then thinking of upsizing and hoping that this happens in the next 3 years, I think it's a really risky move. But if you are an investor, or if you are someone that has the financial means to purchase, live in for 3 years, and then buy another property and rent this out and just keep it, then I really like those ideas and opportunities. I think Greater Vancouver is going to keep densifying. There's going to be more and more new construction. People are going to be more efficient with the land that they were not in the 70s and 60s and 80s. So I think there are some people that it makes sense for, but you need to be willing to let that investment sit there for 10 to 20 years, depending on where. A
sidebar to that, though, I will have to caution, if you do decide to buy into one with the hopes to someday move out and keep it and rent it, just note that, number one, a lot of those older stratas do not allow rentals. But number two, banks do not like to lend on properties that have work coming or that are even that age for that matter. Because if you're trying to use the equity to purchase something else, even in those cases, it's hard to refinance. So be really, really careful. The longer that you live in one of those older properties, the harder it is to refinance.
That's a good point. One of the questions I wanted to answer in this one is, how do you upsize? So I think it's intimidating for a lot of consumers that maybe bought a condo 5 years ago. They've been living there with their spouse. Maybe they have a child, and they just don't know how it how the whole thing works. They don't know that their condo's gone up in value. They just see the sticker price of a single family home in the neighborhood that they're in. Let's say in New West, the low end of livable homes is 1.6 million. In Burnaby, it's probably more like 1.8 to 2 million. In Port Moody, depending on the location, 1.7 to 2.5 million. And they're looking at these sticker prices and thinking, man, that seems unachievable. But what they're not considering is how much equity they've built in their home. So there's a few different options in terms of how do you make this upsize work, and whether it is upsizing to a new home for your family to live in, or whether it is upsizing your real estate portfolio. And those are two very different things and two very different equations that you're probably going to consider. But if you're looking to upsize your home, you've likely built a lot of equity in your current home. And if you are selling and buying at the same time, you're just pulling that equity out. Let's say you bought a 2-bedroom condo for $500,000 a few years ago. Now it's worth $750,000. You've been paying the mortgage down. You had a down payment originally. That's probably 20%. So you're probably pulling $450,000 out of that to put into the new purchase. Yes, you're going to be upsizing your mortgage. Your monthly payments are going to be more. But like we kind of talked about is at this time currently, that equation has made the most sense than it has in the last couple of years because single family and strata property sale prices are closer together.
Yeah, for sure it does. And please, like I think we're the only realtors that ever recommend not selling, if that's a possibility. But please consider not selling your condo and renting it when you upsize. It's just a really, really smart investment. I ran into somebody in my neighborhood. I used to live in the same townhouse complex as him. He bought a house in the area. And I know his complex really well. They allow rentals. And I was like, oh, did you keep your townhouse? Are you renting it out? And he's like, oh, no, we sold it. And he lived in that complex longer than I did. So I know that he bought low. I know that he probably had a crap ton of equity in it. And I couldn't believe that he sold the place. I really, really couldn't. And I know this guy very well. So I know that he had the cash, and I was just kind of, and I know his realtor's his friend, whatever. I was kind of like, oh, bummer. What a missed opportunity. Don't forget that you don't actually have to sell to upsize. That's a really, really important thing. You're basically giving away that sweat that you put into living in that place for so many years. If you've lived in a property that you own in Greater Vancouver for longer than 5 years, please ask your realtor if you have to sell. And ask your mortgage broker, talk to your mortgage broker, find out the equation, find out how much cash you have sitting there.
Yeah. It's intimidating, I think, for a lot of people to have on the back of their mind that, oh man, I now have 2 mortgages. I have, $1 million mortgage on this house that I'm looking to purchase, and I'm refinancing to have a $700,000 mortgage. So I have $1.7 million in mortgages. That sounds like a lot. Think of it in terms of monthly payments instead of this overall big scheme, right? So your monthly payment on your townhouse, if you're renting this townhouse, like Monica's example here, your monthly payment on $700,000 is probably it's about $400. So what's the math on that? $2,800. Let's say roughly $2,800. You're renting that townhouse for
close to $4,000 probably, yeah.
Sure. And
let's say low end 3,600.
Yeah. This is just a random example. So don't take these numbers very specifically that you're going to be making $800 per month on this investment.
Depends on the location and when you bought it. Yeah.
Totally. But take it more that this is the thought process that you should be having if you're considering keeping your home and doing an upsize or moving, is look at it in terms of monthly costs. What is my mortgage going to be over here? What is the strata fee? What is the property tax per year? What is that summary, or what is that sum? Versus what am I going to be renting this townhouse for? If that is cash flow neutral, and you have the financial and your income supports having 2 mortgages, it's a really good long-term idea. Someone else is paying you every single month to live in this house, and it's costing you very little, maybe some maintenance every year. You might have to deal with a few phone calls every year when the toilet breaks or, whatever that may be. So you're adding a little bit of stress into your life, but from a financial perspective, this is where people in Greater Vancouver get wealthy. is that they snowball their real estate portfolio to add units, to add doors that other people are paying for their mortgages. And over time, you're gaining a ton of capital appreciation.
I think it's the most overlooked opportunity for young families specifically. The most overlooked is, my boyfriend has his own apartment and I have my own apartment, and we're going to sell those apartments and we're going to upsize and we're going to move in together. Like, why are we selling both of those apartments? Can we keep one of them or both of them? Like, there's a lot more strategy and business mind that needs to go behind real estate. And I think that that's probably the most overlooked opportunity. Yeah.
100%. And this is a really good time to consider that option of upsizing your real estate portfolio. And if you don't want to move, that's great. Stay in your house. But if you've accumulated a ton of equity in that current home, in that townhome, whatever it is, explore the idea of refinancing to buy an investment property. The numbers make a lot of sense in a lot of neighborhoods in Greater Vancouver right now. And the competition for purchasing those properties is down significantly. So it does make a lot of sense. We have these conversations weekly with clients, and I think a lot of consumers just kind of overlook the opportunity or that they're actually capable of doing these types of investments.
Yeah, and this is definitely a very recent, it's been like this for years and years in Greater Vancouver, but right now, people have more equity sitting in their properties than they have ever. Like, if you purchase quite literally any time 24 months ago and further, you have equity in your home. So you really need to consider all the options. I think that's where the biggest opportunity is right now.
We've all heard this word inflation in the last year. And what does not counteract inflation is letting cash sit in your house. It doesn't do anything for you. I had a conversation with someone the other day where I was cringing the entire conversation. I'm like, oh my God, this makes me really uncomfortable. She owns 2 houses with 0 mortgages.
Oh my God.
And she's owned them. One of them was I think she's had for about 10 years. The other one, 5 years. And I'm just thinking, man, what you paid for those is probably ridiculously low because you bought one 10 years ago. But at the same time, I just don't understand that investment. Let's say the house is worth $2 million. It's in a really good neighborhood. Let's say the house is worth $2 million. Even if you take $1 million mortgage, you can buy 3 new other properties with that other people are paying your mortgages for.
That makes my brain itchy, right away.
It makes me so uncomfortable. I had to remove myself from the conversation. I was like, my brain doesn't function like this. I can't do it.
Oh man, well, good for her. Hopefully somebody gets to her.
I think the point of the story is just be open-minded to exploring these conversations. If at the end of the day you find out as much information as you can from your mortgage broker, from a really good realtor in your area, and it makes you uncomfortable, great, don't do it. It is what it is. But if you are like us in Greater Vancouver, wanting to build a little bit of wealth, to have some more freedom, and owning real estate is exciting. It's I don't know, it's pretty cool watching a city grow and being part of that growth.
Totally. And it's one of the only investments you can make in your lifetime where you're borrowing someone else's money to make that investment. Mm-hmm. You don't have to save $1 million to invest in this really cool thing that probably will make you money. Yeah. The bank's going to give you the money to do it. It's the best. Yeah.
And we've talked a lot on the podcast in the last couple months about market slowing, market values coming off a little bit. You know what has not slowed or has not come off is rental prices. Rental prices keep going up and up. And it seems like every rental in a good neighborhood just goes a little bit higher than the last rental. That 1 bedroom was $2,300. Now it's $2,350. Now it's $2,400.
I think it's right back to how we talked about seller expectations. I think it's tenant expectations. Tenants are starting to just be more accustomed to hearing higher rent prices. Yeah. So just like anything else, right? Once they hear, oh crap, the last one rented for 25, I better get this one for whatever I can. And it's the same. Yeah.
Totally. I like it. 2022 is the year of opportunity. Rephrase your mindset to that instead of 2022 is the year of fear and crashing.